Hey guys, Dan Habercost here, and I wanted to do a quick video on house hacking because it's such a financially impactful way to get started investing. It's easier than buying in a traditional investment property, and it's how I myself and many other investors got started. So I'm going to talk through what it is, and then I'm going to show you a real life example here in Colorado of a house that I still own today that I initially house hacked. So what is it? Very simply, it's buying a 1 to 4 unit property, occupying one of the bedrooms if it's a single family house, or one of the units if it's multifamily, and renting out the extra space with the goal of eliminating your mortgage or even potentially making money each month. For most people, housing is their single most significant expense every month. Rent, mortgage, 30-40% of their income goes to every month. So if you're able to eliminate that, imagine what that'll do for you as far as saving. What can you do with those extra dollars? How quickly would that accelerate your investing? On top of that, it is kind of training wheels for investing. It's a lot harder for your tenants to trash the house if you're occupying the house with them, or if you're right next door. It's easier to get a loan, better interest rates, lower down payment because it's an owner-occupant mortgage, and it allows you to start benefiting from the appreciation and amortization that comes with owning a house. Now, ultimately, this is really any strategy that involves taking your primary residence and renting part of it out, whether it's Airbnb a bedroom, or maybe there's an ADU in the back of the house, right? An accessory dwelling unit that you rent out, or maybe you just rent out one extra bedroom. There's a lot of different ways to do it, but the goal is to get your first investment property by occupying it with really cheap debt and learning how to manage tenants while also reducing your living expense, which accelerates your other investing. That, in a nutshell, is house hacking. So what does that look like in practicality? All right, so let's look at a real life example of house hacking. This is a house, 3530 Carousel Lane here in Colorado Springs that I still own today. I purchased this in 2018 to house hack, right when I moved here. So a couple details here. The house is a split level, and it functions a lot like a duplex, which obviously is advantageous for house hacking. 4 bed, 3 bath, about 2,400 square foot, in a really nice neighborhood, dead-end cul-de-sac, backs up to a park. It had a lot going for it, right? And especially for house hacking. I bought it at $275 in November 2018. As anyone in the real estate world will tell you, prices have gone crazy in recent years, and honestly, $420 is probably a little bit low, but who cares? I'm not looking at selling this. This is a long-term buy and hold. If this goes up or down tomorrow, it doesn't really matter. What matters is if I can rent it. And for anyone that's new, I would not expect this sort of appreciation, or should I say inflation, to continue over the long term. Buy your properties, buy your investments based on the cash flow, not based on hopes of increasing in value. So let's look at the layout here quickly. Up here, you have 3 beds and 2 baths. So there's 2 guest bedrooms, 1 for each window, a guest bathroom, then the master's on the back side with a master bathroom. Here's all the living space. There's a back deck. You can see the mountains, kitchen. Down here, this has its own entrance around the back here. Bedroom, bathroom, living room. So it works great for house hacking. I rent out these 2 extra bedrooms, and then I rent out the basement as its own suite. So let's look at what those numbers actually come down to. All right. So I laid out 3 different scenarios here. It kind of shows the progression and also illustrates how owning real estate tends to improve over time. So I purchased it in November of 2018. The initial mortgage, there was higher interest rates back then, was $1,761. Utilities average out to about $230 a month. Rents, $700 for each bedroom upstairs plus $900 for the basement, equal $2,300. That's $309 extra dollars above and beyond mortgage and utilities coming in every month while I occupied the property. And On top of that, the house was completely updated, very meticulously cared for by the previous owners. There have been no capital expenditures and almost no repairs and maintenance on this. And as far as I can see, barring any sort of, extreme weather or accidents, there aren't going to be any capital expenditures anytime soon. So 2020, I was still living in it. I refied it. Mortgage went down to $1,471, all else the same. Was making approximately $600 a month while living in it. And then today, I've moved on, bought another house hack, rented out the master bedroom I was in. Mortgage stayed the same, utilities are the same. There's now $3,100 a month coming in on rents. So that's a nearly $1,400 spread there. Again, some of that needs to be set aside for repairs and maintenance and capital expenditures down the road because they will happen. But nonetheless, this has been an awesome investment. On top of these already great numbers, the basement is rented at $900 a month, and that would now rent for $1,200 or $1,300 a month. But she's just been renting for me for several years, and I haven't increased it on her because she's been an excellent tenant. So there's upside too once she moves out. So look at the first scenario here. Pretend this is you. Maybe you've never bought anything. Maybe you're paying rent to a landlord, or you just have your mortgage. What would it do for your financial situation if you were able even just to break even? Let's pretend the rents only cover the mortgage, not the utilities, just the mortgage. What or how much quicker could you invest into other properties, into retirement accounts? How much quicker could you reach financial freedom if you're not paying your monthly housing expense? I would have to imagine that it would be very financially impactful to do this. On top of that, the loan is amortizing, and the house ideally is appreciating, and you're learning how to be a landlord. So it's really hard to go wrong house hacking, and this is just one example. If you can buy a fourplex or a triplex, duplex, that works too. Again, as I said earlier, even if it's just an extra ADU on the back of the property that you Airbnb, there are a million ways to do this, and it's hard to go wrong house hacking. So that's a real life example, and there's no reason that you all can't do the exact same thing in your own business.